You're listening to Leading Voices Shaping Middle East Business and Economy. I'm Amjad Ahmad, and this is empowerME Conversations. Let's jump in. Hi, everyone, and thanks for joining us. Today's empowerME Conversation is with the serial entrepreneur behind Nemshi and Tabby. From fashion to fintech, he has made his mark on the entrepreneurial ecosystem in the Middle East. Welcome, Hosam.
Thanks, Amjad.
Hosam, I wanted to start by getting a bit of flavor of your entrepreneurial journey. You graduate HBS, you go into investments for a very short period, and then you basically become an entrepreneur. So what made you do that?
Yeah, so I guess what made me go to HBS was what drove me here in the first place, right? So initially, I actually graduated as an engineer. I trained as an engineer and tried out a couple of things in that space for some time, and jumped around quite a lot more than I would have liked in my early career. So did a stint in Schlumberger, did another stint at GE. And a couple of things in between. And to be honest, at every point, I left just out of a realization that I wasn't enjoying what I was doing. And so I thought HBS would give me my answers. And within, I guess, right after leaving HBS, again, it was the same kind of scenario, right? I did some advisory work, didn't enjoy that, then went into private equity, hated it as well. And so I think it was a process of elimination. I tried, then decided maybe it wasn't the industries themselves, it was probably just me. And entrepreneurship was probably the answer.
Entrepreneurship was in the blood, as they say.
Yeah, I think so. It doesn't run in the family. So I'm the first entrepreneur in the family, but I think it's just a lack of enjoyment and a lack of kind of fulfillment in everything else that I was doing along the way.
So you started Nemshi, which is an e-commerce company focused on fashion, fairly early in the region. I mean, at the time, I would call it the rise of the mall rather than the rise of online. So tell me about that. What sparked the interest, and what did you see that others weren't seeing?
Sure. So I guess I had come back from the US a couple of years before that. I had my first experience with Zappos. Back then, it was early days, I think, for Zappos. Early days from when they really managed to scale up while I was in the US. So that was 2007, 2008 timeframe. And it kind of stuck in my head. I came back to the region. And as you said, there wasn't much going on. I think Souk was around, and they were still trying to figure out which direction they were going in. And there were a couple of players in the kind of daily deals space, but that was about it, right? And we thought what really is missing is a high customer experience option for consumers to buy what they want. And while Souk was dabbling with electronics, we thought fashion is probably one of those spaces that was missing. And I think at the time as well, we were lucky to actually quite lucky to run into Rocket, which were setting up similar businesses in other parts of the world. So we just met, and it was completely coincidental around the time when I had decided that I wasn't going to continue in the corporate route. So I actually had quit my job by then to think about what to do next, and it all kind of came together. So lots of coincidences, I think, led us there. But what was important was that the gap was very, very clear. Right, it was there wasn't much going on in the space, and we thought, why not give it a shot?
What's interesting is that I think fashion was one of those that everyone globally was sort of questioning whether it could work online. What did you see in the Middle East that made you think, you know what, this could work?
Yeah. So, I think less so the Middle East. I think what we were looking at is fundamentals of fashion e-commerce. You just have a very high margin product. And so there's more room for you to play with as in the e-commerce space, especially in a fragmented market like ours. So fragmented and possibly high cost. We didn't know all this stuff obviously early on. It was a lot of trial and error, but what was very clear, it was a very high margin business with appeal in other markets. So what we were saying is, customers in other markets value convenience, there is no reason why customers in the Middle East wouldn't value convenience, right? And there is no reason why customers in the Middle East wouldn't value a broad assortment and a great overall experience. So that was the driver there. Obviously, we were met with a lot of just a lot of questions from retailers, from investors, and so on, saying, "Yeah, but Middle East is different, right? The
Right.
customers in the Middle East love the malls and they love going to the stores and so on."
We still hear that today.
Yeah, we still hear that today, right? But as well, they love the malls in the US, they love the malls in Europe. It's not that customers dislike the malls; it's just that customers. If you ask most customers, what do you value more? Most would say they value convenience, and so that was the driver for us. Was a strong belief in that, in the fact that customers looked for convenience. And again, when you looked at what was available in the market, I think while the convenience element was trying to be addressed, or they were trying to address convenience, what they were missing out on was the experience part. And so that was a key focus for us as well early on, is offering customer a convenient option needs to come at the same time as a very and as an experience as a great experience overall.
Right. And just to focus a little bit on when you started, the landscape was very different. I think today, entrepreneurship and starting a business is a bit more common. Tell us a little bit about the landscape at the time and putting this the team together, the capital.
Yeah.
I mean, it must have been a huge and very different exercise than it is today.
Absolutely. And again, I think my approach at that point in time was either I go out and start something from scratch and go out and fundraise, or the alternative approach was, you have a vehicle like Rocket, which was willing to fund
Absolutely.
a business, right? And so we took the lower risk approach, where it was more about execution risk than financing risk at the time, and we bet on ourselves to execute. Right, so we left kind of the early day funding piece to Rocket, which was great to have them around, because as well, as you said, Amjad, if you looked around, there was very, very little in terms of options for fundraising. And we spoke to a few entrepreneurs in the region, and they were saying it was impossible to get access to capital because whenever they went to any potential investors, they were met with blank stares and others saying, "Yeah, but I invest in real estate. Why would I invest in tech?"
Right.
Yeah.
And why will it work here?
Why would it work here again?
And you went through a very interesting growth phase with Nemshi. I would say the whole industry was really growing with you, and you were growing with the industry. What surprised you about those 7-8 years in the growth path on a positive side, and what surprised you on the negative?
Yeah. So the industry really started to grow, I would say, at around year 4 for us.
Right.
And first 3-4 years.
So that's what, 2015?
I'd say 2015.
Right.
Is when we started seeing a lot more activity in the space. And then I think 2016, 2017, you started seeing the Chinese come in as well. So a mix of international and regional players around the time frame. But for the first 4 years, we were really left kind of alone, right? We were left to experiment, learn, figure things out. Obviously, there was the occasional startup that came up, but there wasn't much going on. But it really allowed us to learn, right, and build things and break things and just experiment as we went. I think that was extremely valuable, right? Because I think that was necessary to start informing kind of people around us and other potential entrepreneurs of what worked and what doesn't, or what didn't, what were the challenges. The whole piece about kind of building out last mile was something we also forced ourselves into just because of the lack of the available options out there. So, I think it was a great time to experiment, and I don't think we would have been able to do much of that had it been a highly competitive market already where everyone is burning cash, right? And that's kind of phase 2, 2016 onwards is where you started to see a lot of investment pour into the space. And probably 2017, 2018 is when people just, they really aggressively went into the space. And what we started seeing at that point was mass competition and mass discounting, because that's the only way that businesses were
You can win
saw that
market share, right? Right.
and so, yeah, I mean, that's, I guess, the early stage is what I really enjoyed, right? Building and building an ecosystem around us, and just and learning, and kind of the ability to experiment. Later down the line, I think just because of, I think it's fairly typical of this market where things heat up very, very quickly.
Right.
And once they heat up, um, there becomes very little creativity and differentiation. And so very quickly you get into these races to the bottom, which, you know, while they're happening, people just don't realize that up until it's too late. And I think we've seen the
Sure.
culmination of that in a few cases over the last few years.
And you know, we hear a lot about the challenge of scaling in the region, which still exists today. What can you tell us about the experience first in e-commerce, and we'll get to Tabby in a minute.
Yeah.
But you know, specifically with e-commerce, you again, you were in an environment that was very early. What did you experience in terms of that scaling?
Yeah, so again, I think I would say the first 2-3 years were extremely slow to scale, just because there weren't many channels to scale through, right? So, you know, obviously Google was there, Facebook, we could do a bit, but it just wasn't as developed as it is today. And the other thing that was missing in this market was just apps, right? We also kind of stumbled into apps. It wasn't a big strategic decision that we decided to build an app. Actually, there were a lot of doubts within the business on whether we should build an app or not. Nobody had really built an app in the region to sell fashion. It just, you know, it just didn't make sense. Why would people want to buy a dress on a small screen?
I remember those days. Yes.
Yeah, no, but it was crazy. I mean, we felt that was a game changer for us, right? So we initially built out the app, and in no time it went from 20 to 30 to 40, and we ended up at 85-90% of our transactions were going through the app.
Amazing.
But that was a great way to scale the business as well, because then and especially in the early days, it was extremely cheap to get app downloads.
Yes.
And so as opposed to where it is today, where it's insanely competitive. So we also had that luxury of just being able to scale downloads on the cheap. The other thing that we saw, I would say around 2014, 2015, is we started to experiment with influencers. Again, very, very cheap. They didn't realize the value that they were providing. And we just managed to scale that extremely quickly and build that model when not much of it existed in this part of the world.
And what about your cross-border scaling? Because we know that's a challenge. What did you find?
Yeah, so I mean, what we saw is once we started marketing to Saudi, again, you know, what drove our decisions at Namshi a lot of the time was we let kind of the customer decide, and we let the data decide where to take us, right? So it wasn't kind of big calls and strategic decisions within the business of what's next. It was, let's test something out, and if it catches on, then we'll go there, and if it doesn't, then we kill it very quickly. And so Saudi was one of those. We launched Saudi in 2012 as an experiment to see what happened there, and again, very, very quickly it became 40, 50, and ended up at 80% of our volume. But yes, it was a challenging market. So it was a challenging market from a kind of delivery perspective. Very challenging market from a payments and COD perspective. But just, you know, the economics of a fashion of a kind of own inventory fashion business allowed for us to build that out, right? And it allowed for us to burn margin while we tested it out and got to a point where that worked, right? And how did that work? It was, you know, let's optimize on delivery and cost in the UAE where we can, and in Saudi try to optimize on just efficiency of the solutions that were available to us. I mean, again, we used what was available, so we used Aramex, and we realized that the experience was not great, so we started building on top of Aramex and embedding within Aramex. And these are things that, you know, you don't need to necessarily think about in more mature markets, but unfortunately in our markets, they just become part of how you build that business, or a necessity for.
Of course. Hosam, it sounds to me like a lot of the advantages you had were being first mover, is that you had this unique ability to sort of have the margin, not have so much competition out there. Things were, let's say, priced much better than they are today.
That's
When you
accurate.
look at
Yeah.
someone who's entering e-commerce today, what would you tell them?
Yeah. I mean, honestly, a lot of the time when I look at businesses coming to e-commerce right now is unless you're very clearly differentiated, um, don't come in, right?
Right,
Or don't come in, or don't come in if your expectations are you're just going to become number one and dominate this market. Because unless you're willing to invest very heavily in this business, then you shouldn't do it, right?
right,
Or you're not going to achieve that. So I strongly believe that people need to have an online presence, but the shape of that online presence is is what they need to think about, right? What does that look like? Do I need
right.
to build it myself? Do I need to give it to others? And if I will build it myself, is this something that I expect to scale immediately, or can I just develop it over time, patiently?
Right.
Um,
Yeah, the white
because
spaces are disappearing, right?
exactly.
They're not that many anymore.
Yeah. No,
Yeah,
and especially in a fragmented market like ours, those niches don't scale very well, right? I mean,
yes,
it's very difficult
yes.
to scale niche business as opposed to a market like the US.
Right, where you actually have the numbers, right? The numbers
Yeah,
make
yeah,
sense. There's this constant argument today, whether, vertical e-commerce versus horizontal e-commerce.
yeah.
I'm curious, what's your take as sort of a veteran in this industry? What's your take on that argument, horizontal versus vertical?
Yeah, I mean, I think especially in our market right now, it'll be extremely difficult to compete with the horizontals, right? They're
Right, we have two
both
big ones, Noon
two big
and
ones and with extremely
Amazon.
deep pockets and the
Right,
expertise and the know-how and the connections, and it'll be very difficult to play in that space. So it becomes very important to identify a space within that that you can play in. But even when you look at some of the some of the vertical plays that we've seen more recently, um, even those are becoming challenged under the Noon and Amazon plays, because these guys are really starting to get deep into each of those vertical
right,
spaces as well. Right.
right.
We saw it with Spree, and I can imagine there's a few other verticals in the space that are starting to really feel the pinch from those two big boys.
Right.
Yeah.
Going back to differentiation, unless you have something really unique to offer,
Yeah, yeah.
very
And I
different.
think that's where it kind of, fashion, there's an opportunity for fashion, obviously. But again, if
Yes.
you're going to do mass market fashion, then there's not room for three or four of them. Beauty as well. I think a couple of people right now are trying to step into the beauty space because of the gap that was left by Boutique Cat. But yeah, I don't think there's many opportunities that can scale significantly within these verticals. Then what makes those appealing is just the experience for those products are much better in a kind of their own space than they would be sitting on a player like Amazon and Noon, where
Absolutely.
the experience is very different. Having said that, I think both of them are getting to the scale where they become quite compelling or quite significant in terms of volume, even within those niche spaces.
Yes. Yes. And do you believe in the omni-channel play? I mean, do you believe in the offline online sort of conversion?
Again, I think it's giving the customer the experience or the option to buy where they are comfortable buying. It goes back to convenience. So if you have access to that inventory and you're not investing in that inventory, you're not having to invest in an inventory for an online play and scaling that alone, then that gives you a bit of an
Right.
edge, right? I think just the ability to spread over a broader customer base allows you to invest more heavily in that inventory, right? And I
Right.
think the few examples that we've seen in the fashion space where it was a pure play fashion player, when they try to invest too quickly in inventory, you end up making way too many mistakes that end up killing the business. And we saw that a couple of times, right? Again, the advantage that we had with Namshi is we had the luxury of time where we were able to experiment and improve our assortment into what really sold, rather than saying we need to sell $100 million in year one, which we've seen in a few cases.
Yeah, and as you said, having a sort of a backer early on where you didn't have to worry about the capital was key to that as well.
Yeah.
So you sell Namshi to MR, you take a day off, and then you decide to do another venture.
I'm wondering whether it was a full day or not.
You're right, it's a half a day.
Yeah, it was half a day.
So tell us a little bit about that, and you went from fashion to fintech, which is again very interesting.
Yeah.
So again, what prompted that?
Yeah, but again, I think I go back to my kind of pre-Namshi days, where the process of an elimination was there. I think it was very clear to me that I did not want to do fashion e-commerce again, or e-commerce period.
Right.
So that was very quickly taken off the list. And fintech, I think what I wanted to do is something that was quite challenging, but at the same time, I saw a lot of value for the region that we're in. And it was a space, specifically buy now, pay later, that was really heating up in other markets, with a clear kind of value proposition for both sides of the coin, both the merchant and the customer. So all that kind of put together, one of our biggest pain points as an e-commerce retailer. So I did want to kind of still work within the space, just not particularly run an e-commerce business. And so one of the biggest problems that we saw as a fashion retailer or as an e-commerce retailer was just the dependency on cash as a payment option. As I mentioned, over an 8-year period, we saw cash decline from 85% of a share of transactions to 75% share of transactions. So it was a very slow movement away from it. For any e-commerce retailer, that presents just a large obstacle to scale. And we thought, how do we solve that, right? How do you provide an alternative to customers that is of value to them, that replaces cash? What we all tried back in the day as e-commerce retailers was we tried both incentivizing customers away from cash and disincentivizing customers away from cash. And neither really stuck and neither really worked, right? So the incentives were, we'll give you a discount if you pay by card. And the second you switch off that discount, they revert back to cash. And similarly, we added the cost on COD, and still customers just really went there and didn't move away, despite our early hypotheses that people were early on trying out paying via cash and then would move to card. And so the big question in our minds was, why are people doing it? And I think what we saw across the board was people just had very low trust in e-commerce retailers. They had trust in the experience and the product that they were getting and whether they were getting it delivered on time or not. And so they would always just naturally push the risk back onto the retailer. And so that kind of drove our decision to look at buy now, pay later, which by design allows the customer to pay after they've received the product, right? So it was blowing up in other markets for different reasons. The reason was purely a more convenient financing option for the customer. But we said if we can add to it a reason which improves the trust of the customer and the retailer, then I think that's even more valuable in our market. And hence,
so it's an important thing that you mentioned. So it obviously grew in other markets for different reasons, but in our region, what you're saying is that it was more to do with the trust of the e-commerce players rather than really just presenting another financing option.
What I'm saying is the financing option on its own is interesting and appealing to customers, right? I don't think it's not. I think they definitely see the value there. But if we add on top of it that additional element of increasing the trust and removing that burden from the customer, then why not?
And does this hold true as it does in other parts of the world, the demographic that's primarily using this is sort of a younger demographic, or is it more across the board in the
Yeah,
region?
so we haven't seen it. So I think, as you said, right, in other markets is primarily a younger Gen Z type consumer.
Yes.
Over here, we are seeing it across a broader demographic, right? And I think that's where this kind of trust element comes in.
Yes.
Which obviously is quite important for us.
And fintech has been very slow in the region to come and to grow. Give us a flavor of why you think that is, and what's changing today about the fintech growth.
I think generally we have been followers. So e-commerce came a bit later, and I think just right now fintech is coming a bit later down the line. Regulators generally were not ready for it, and I think they're starting to become a lot more open to having discussions with fintech players like ourselves. But just the space as a whole, I think they realize that this is a space that requires change and improvements in how we serve our customers and the products that we're making available. So I think just it was the right time for us to start looking at it as a region, the region as a whole, as it's really developed and caught on in other markets, and regulators in other markets were becoming a lot more comfortable with it. I think that brought the regulators that gave them that level of comfort that they were able to start, or more open to have those discussions with companies such as ourselves.
So you're sensing that the regulations and the laws are heading in the right direction from what you're seeing?
They definitely are, right? Are they exactly where we need them to be now? Definitely not. But I think the fact of the matter is that they're having those discussions with us, which is extremely important, right? We're having those discussions with the central bank in the UAE and the central bank in Saudi, and they just give us that comfort, and they give our investors the comfort to back us and back what we're doing.
Right. And so Hosam, if you had to compare your last, early stage versus this early stage, it'd be great to hear about the differences and well, how the challenge was different, because again, the other one was what, 2011, I think.
Yeah.
It's almost 10 years ago. So how were the two experiences? How did they match up?
I think the two things I would say is now we definitely don't have the luxury of time, right? So
that's for sure.
Yeah. So if you don't execute extremely quickly, you're leaving a lot of room on the table for others, right? And I mean, if we look at how quickly we launched Tabby, raised the funding, launched Tabby, and took it into two markets. I mean, all of that was within a 6-7 month time frame, right?
That's very fast. Yes.
We definitely did not do that the first time around. And secondly, as well, just access to capital. There was a much larger potential pool of options for us, both regionally and internationally, that were interested in the market, right? Equity investors were extremely comfortable with coming to the market this time around.
Right.
And obviously,
although you're one of the few that's really experienced that, right? I mean, you've been very fortunate. It hasn't been the case for many others.
I think maybe that's where track record does give a bit of an advantage, right? The comfort or the questions that they ask are slightly different.
Right. What has been the least to change that's still a challenge for you in starting both?
So, I mean, I think there's a lot. So I think regulations I kind of discussed, but I think more on the kind of government topics, they're still the same, right? So we're still having to sign up offices for visas, which is mind-boggling, right? And we are a company that's a year old, and now we have two licenses, or two kind of business licenses, and two different entities, because we need to hire more people. Right? So that hasn't changed. The ability to open up a bank account really hasn't gotten much easier. And again, we were probably more fortunate because we were able to. We had those relationships, but I hear that that's an ongoing challenge for a lot of startups in the region.
Absolutely.
To simple bank account. Right. So I think a lot of the building blocks and a lot of the kind of basic admin pieces are broken and they're not
Yes.
getting fixed.
And they're costly.
And they're extremely costly.
Right.
Yeah.
Right.
And for a startup, that's that's not an area you want to invest your time or resources.
Absolutely. Absolutely. Yeah, you want to focus on the market and growing your share, right? That's
Yeah.
the more important issue. And what would be your, if you're sitting across from a government body or a minister today in the economy, or someone whose job it is to grow entrepreneurship in the region, let's say, what would you tell them? I mean, what would you advise them as the most important one or two things to focus on to spur more entrepreneurship? Because that's what everyone is really trying to do.
Yeah. I mean, I hope I'm not being too controversial here, but I mean, it is.
Please be
I
controversial.
I think we spend way, or these entities spend way too much time on PR, and so the PR sounds great,
Right.
but then there's not much behind it, right? And I think if we flip those around, I think we'd go a lot further.
Do
right?
more,
So,
say less.
say less, exactly, and spend less time talking about it, right? I think
right.
We do a great job at PR across the region, but it's just generally not enough.
Right. Yeah, no, fully agree. And what would you tell sort of the young people today that are going into entrepreneurship? What would you advise them?
Yeah, listen, I mean, so I've seen a lot of young people kind of trying it as a side project, and I think one of the clearest lessons for us is you can do a half-assed job at entrepreneurship. You can do it as a side hustle. In other markets, maybe you can. Over here in this part of the world, I think you need to put everything into it, and more, right? So, I look at myself where we've had a successful exit, and I've kind of done this to a certain extent before. It definitely was not easier. Right. It doesn't get easier. I think the challenges are still this. A lot of the challenges are still the same, and the effort is not any smaller. So unless you're able to invest that time and effort into a startup, it's definitely not a hobby.
No, I fully agree. And what would you say about, obviously we've had a very challenging year in terms of COVID and the economy, but where do you see this going forward? I mean, you've just started a business in a very challenging year. But what have you been seeing on the ground in terms of what's happening recovery wise? What are you seeing?
So I think we're seeing a lot. The e-commerce space itself obviously benefited massively from it. I think what we saw early on in COVID was just a lot of uncertainty and people just not knowing what to expect. So that slowed things down a little bit, but that was very short-lived. And very quickly, people realized that the opportunity was very clear ahead of them, and it was go digital. So that was a benefit for the ecosystem as a whole. And the other thing we kind of worried about early on was, are investors going to tighten up their purse strings and
Right.
reduce investment? We also didn't see that either, right? Again, there was a short period of kind of let's find our feet and then decide, but that was also very short-lived. So on the whole, I think it's been a great time for entrepreneurship. It's been a great time for VC funding in the region. And I think, hopefully we're not going through into a second lockdown that just puts us in a repeat of the February-March timeframes. But if we can keep things going, then I think the opportunity is massive ahead for all of us.
Well, thankfully, there's also vaccines on the horizon. So I think we all see light at the end of the tunnel. So we hope that changes. And and I think that the region has done fairly better, I think, than most, which I think is a positive sign. My last question is coming back to Tabby is, what would you like to see in terms of Tabby in the next few years? I mean, is buy now, pay later sort of the only solution, or do you see this expanding to a wider platform that services consumers in several ways?
Yeah. I think I see buy now, pay later as a great springboard into other products that could be valuable for the consumers, right? I think that's buy now, pay later. What's nice about it is it's a very clear value proposition to the customer, and it's a nice hook for the customer to get them, buying through you. But then what else you can do is we're looking at what other products we can build for these consumers that just make their lives easier, right? If you compare what we're doing to, say, a wallet or a neobank or these products that are out there in the market, what differentiates us and what I really love about this business model versus others is the customer acquisition cost is essentially zero. You're not spending money on acquiring customers because you're acquiring these customers via the merchant.
Absolutely.
And so and as opposed to a wallet where you need to go out and invest in customer acquisition, in neobank, it's the same thing, right? We're hearing $300 to $500 acquisition costs for any one of these large or new digital banks. And so if we can build things the other way around, I think that actually gets quite interesting.
Right. And who knows, maybe you'll become a neobank.
That's what I meant.
Absolutely. Absolutely. Well, Hosam, we're excited to see where Tabby goes next. And we're excited to see your journey. You've been an inspiration to many in the region, especially the young people. So we wish you all the best.
Thanks so much, Amjad. Thanks for the time.
Take care. Bye-bye.
Have a good one. Bye-bye.
Thanks for listening. If you like what you heard, please subscribe to empowerME Conversations on your favorite podcast platform, and please tell your friends about us. For updates on our work, follow Atlantic Council Rafiq Hariri Center and Middle East Initiatives on LinkedIn and at AC Mideast on Twitter. You can also visit www.atlanticcouncil.org and click sign up to receive email alerts about the work of the empowerME Initiative. See you next episode.